Hey there, everyone! Welcome back to our channel. If you're new here, my name is Your Name, and today we're diving into an exciting topic that can set you up for financial success in the future: how to start investing as a student. It might sound a bit intimidating, but trust me, it's more accessible than you might think. So, whether you're in high school, college, or just curious about investing, stick around. But before we jump in, let me ask you this. Have you ever thought about how your money can work for you instead of just sitting in a bank account? Great! Let's get started. First things first, why should you invest as a student? Investing early has a superpower: compound interest. This is basically earning interest on your interest. For example, if you invest $1,000 today with an average annual return of 7%, in 30 years, you could have over $7,600. That's the magic of starting young. Before diving into the investing world, it's essential to have a solid understanding of your finances. Start by assessing your budget. As a student, you might have income from part-time jobs, allowances, or maybe even scholarships. Write down everything you earn and all your expenses, like tuition, rent, groceries, and entertainment. This will give you a clear picture of what you can afford to invest. Before you start investing, aim to set aside some money for emergencies. About 3 to 6 months worth of expenses is recommended. This way, you won't have to sell your investments at a loss if an unexpected expense arises. Now that you've got your finances in check, let's talk about where you can invest your money. Here are some beginner-friendly options. Investing in individual stocks can be exciting, but it does come with risks. If you're interested, consider starting with fractional shares, which allow you to buy a portion of a share rather than a whole one. Platforms like Robinhood or M1 Finance make this process easy and accessible. Example, let's say you're interested in technology companies. Instead of buying a full share of a high-priced stock like Apple, you could invest just $10 or $20 in a fraction of a share. ETFs are a fantastic way to invest in a diversified portfolio without needing a lot of money. They are like baskets of stocks that track a specific index or sector. This means you can spread your investment across multiple companies, reducing risk. Data point: according to a report from Morningstar, those who invest in diversified ETFs have historically seen better returns than those who invest in individual stocks. If you're feeling overwhelmed by all the choices, robo-advisors like Betterment or Wealthfront could be a great option. These platforms use algorithms to manage your investments based on your risk tolerance and financial goals, and they often have low fees. If you're interested in real estate but don't have a lot of capital, consider real estate crowdfunding platforms like Fundrise or Realtymogul. They allow you to invest in real estate projects with smaller amounts of money, starting as low as $500. Investing isn't just about where to put your money, it's also about understanding the market. There are many resources available for students. Consider reading classics like The Intelligent Investor by Benjamin Graham or Rich Dad Poor Dad by Robert Kiyosaki. These books break down investment concepts in easy-to-understand ways. Websites like Coursera and Khan Academy offer free or low-cost courses on personal finance and investing. Listen to podcasts or watch channels dedicated to investing. They often feature interviews with experts and provide current market analysis. As you start your investing journey, it's crucial to set clear financial goals. Ask yourself, are you saving for a new car, a study abroad program, or maybe even a down payment on a house? How long do you plan to invest? Short-term goals may require less risk, while long-term goals can allow for more aggressive strategies. Investing is a marathon, not a sprint. It's easy to get caught up in market fluctuations or trends. Remember, the key is to stay disciplined and stick to your strategy. Example, think about the stock market crash in 2008. Many investors sold off stocks in panic, while those who held onto their investments saw significant recovery in the years that followed. So, to wrap it all up, starting to invest as a student is not just possible, it's advantageous. By understanding your finances, choosing the right investment options, educating yourself, and setting clear goals, you can set the stage for long-term financial success. If you found today's video helpful, please give it a thumbs up and subscribe for more content on personal finance and investing. And remember, the earlier you start investing, the more you can benefit from compound interest. Thank you for watching, and happy investing!